extras, including chicken, beef, real meat, fruits, and veggies. Being prepared is a state of mind. Take advantage of this special discount to secure your family's future now. Go to mypatriotsupply.com. If you order by 3 p.m., your order will ship within the same day, so you'll be prepared in no time. That's mypatriotsupply.com. mypatriotsupply.com.
Broadcasting from the Kanowski-Bresney studios comes the radio medium Laura Lee Show.
I feel like you had to let him go.
Yes, it is. He was on life support.
You've taken on the burden for his passing. Is that true?
That is right.
There's something to do with a Barbie doll.
He used to stick the old school Barbie dolls in the cake.
Oh my God, you're giving me goosebumps right now.
The radio medium Laura Lee Show. Tune into your spirit every Tuesday at 4 p.m.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child, plus you, who sold the house, might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Friday here on the Financial Exchange. Chuck, Mike, and Tucker with you. And we got the jobs report for the month of February out at 8:30 a.m. Eastern time today. And Mike, my interpretation on this, and here's the numbers. I'll give those first before my interpretation. Total non-farm employment rose by 151,000 in February. The unemployment rate ticked up a little bit from 4% to 4.1%. Prior months saw minor revisions. December was revised up 16,000, January down 18,000, so a net change of 2,000, so no major revisions or anything there. We saw average hourly earnings increase by a 0.3% rate for the month. And overall, again, you look at kind of like the top line stuff and you say, yeah, this is basically, I mean, you don't want to see the unemployment rate going up, but you look at it and you're like, this is basically what you want to see. I know that the headline was like, here's the CNBC one, U.S. payroll growth totals 151,000 in February, less than expected. The expectation was 160,000. So yeah, given that the average revision is like 60 to 70,000, this is basically right on the nose for where you would expect this to come in. So I'm not going to, say that this is a miss on that front. So the headline numbers, I think, are actually pretty good and pretty much where you want to be. Is that a fair take?
Yeah, it was a just fine report. It didn't indicate anything that would be inflationary. It didn't indicate anything that was recessionary. It also might have nothing to do with the whirlwind economy that we seem to be living in since March 1st either. So I think the context here is important. Yes, it was a February jobs report, but it's not like it was measuring anything on February 28th. This is going back several weeks before investors, at least, were taking the threat of tariffs seriously.
So the headline numbers, again, just fine. Under the surface, there is some stuff that gives you a little bit of pause when you look at it. Couple things that I like to pay attention to. The first one is what we call the labor force participation rate. Basically, it's, hey, what percentage of the population is saying that they are involved in the labor force? And that doesn't mean they're employed. It just means, hey, like, are you looking for a job? Are you, at a job? Like, anything like that. And that dropped from 62.6% to 62.4%. So the first thing that you say just immediately on that is, hey, all else being equal, that means that if that didn't happen, the unemployment rate is going from 4 to 4.3% actually.
Yep.
not to 4.1.
Sure.
So that's the first thing that you look at and you're like, okay, like that's kind of interesting and not necessarily great. Other things in here. Remember, the unemployment rate that we talk about is the headline unemployment rate, but there are a bunch of other ones that are included in here. And one of them is what they call the U6. And the U6 is commonly referred to as the underemployment report. And basically, to give you an idea of it, the one that we report on is called the U3. It's total unemployed as a percentage of the civilian labor force. The U6, we talked about this a lot in particular in the aftermath of the great financial crisis, because underemployment was a big problem there for a while too. But the U6 includes total unemployed plus all people marginally attached to the labor force, plus total employed part-time for economic reasons as a percentage of the civilian labor force, plus people marginally attached. So it's basically, hey, someone who's like looking for a job but not technically in the labor force, and also people that are part-time but want full-time work. That jumped from 7.5% to 8%, and that 8% is now a cycle high for the post-pandemic period. So that's something that you look at and you're like, okay, that's not necessarily a great sign either, that the underemployment number moved up by 0.5% in a month. That's a little bit problematic there.
I think when we headed into this labor market, this jobs report, rather, Chuck, the way that we would describe this labor market, and this is not novel and it's not new to us, it has been a labor market that's been kind of frozen. No people quitting, companies not laying off, and nothing about this report to me really contradicts that in any meaningful way.
No, I think that's fair. Other things, just I'm going through. There's an index that I like to use. It's called aggregate payrolls. Basically, what you do is you combine the payroll growth and wage growth, and I kind of use that as a proxy for like how much is spending power moving up in the U.S. because it's pretty much, hey, how many people have jobs and how much are their wages going up? And historically, if you look at this, and again, this is one of my favorite series, so I look at it's the first thing that I look at every month after the headline numbers, just because I think that it's just a great proxy for potential consumer spending. And if you look at this series in really kind of like 2011 through 2020 and through 2019, it basically fluctuated. The high that it got to was about 5.4% annual growth, and the low that it got to was around 3.5%. And that 3.5 was in August of 2016 when the U.S. economy had some dodgy things going on just because the energy sector was in a recession because of oil prices plummeting as Russia pumped a bunch of oil and things like that. There were, a whole bunch of disruptions. China had devalued its currency the year before, and so that was kind of the low that you got to there. This number, which had been floating, kind of in that 5 range for the last, year, looks like, 12 to 15 months, dropped to a 4.6 number here, which in and of itself is fine. It's right in the middle of the range that you're in, that you've been in for the last, year or so, or the range for, kind of the 2010s decade. But you don't want to see it start, tilting down further towards 4 or 3.5, because that's basically saying, hey, your people are losing the ability to drive the economy through consumer spending. And given that at this point we still are predominantly an economy that's 65 to 70% driven by consumer spending, if that becomes an issue, it potentially creates a demand problem in the U.S. So none of this is something where you look at and you're like, again, earlier this week, you were seeing all the talk of, are we already in recession? Or like, is this like the Trump session? No, it's not. Okay, so let's pump the brakes a little bit. But these are things where you say, hey, let's watch them over the next few months and see how they develop, because there are some conditions developing that potentially start to look a little bit recessionary if they continue for a few more months on a downward trend.
Yeah, the piece you were making about the aggregate payrolls has always been interesting to me as well, that, it does track fairly well. And, you go take a look at the 2022 period where those aggregate weekly payrolls were, 12% year over year. And you can see how you got to some pretty high inflationary levels between that and supply chain disruptions. The interesting piece today is how much of that spending that you just referred to is coming from the top 10% of earners, right? And so we always talk about, hey, consumer spending being based on payrolls and how much you're taking home. a lot of it recently has been seemingly more based on asset prices and how the wealth effect that folks have been feeling recently. And you would expect these two things to kind of coincide, right? If you saw aggregate weekly payrolls go down, you might also see stock prices go down. But if you didn't, I would be very... It could be a weird, shocking experience here where, people are getting laid off, but purchases aren't really going down because the stock market stays up. That would be a wild thing to see.
Yeah, there are a lot of balls in the air, and this is another one that you have to try to sort out in this environment here. So overall, I think that this jobs report, you grade it out in the context of, hey, headline numbers look good. There's a few things underlying that are starting to show some weakness. It's probably like a B minus.
Yeah, I was at a B.
Yeah, it's fine. Like it's not something where you look at it and you're like, this is inherently this huge issue, but hey, clean up those underlying things a little bit, and you're within sniffing distance of B plus A minus. Like it's not anything to write home about either way. This is one that you're gonna forget about, even though, like, I know in the lead up to it was like, this is the most important jobs report.
It's always the most important jobs report.
No, we poo-poo that a lot.
We do, yeah. And it wasn't.
This one I think you could look at, and like, if this were a bad report, I think you could be like, oh, okay, this is like, now we're starting to see some real issues here that are developing. But it's not one that I was like, this is, some huge thing. There were ones last year where, heading into the fall, we were sitting there saying, hey, like, the jobs data has been getting bad for 3 or 4 months now. If it continues, there's some recession on the horizon. And, kind of heading into like September, October, and they bounced and you were fine. Which is why I don't get too excited about this here. It's like, yeah, there's some stuff that you got to watch the next few months, but there's nothing in this report that's going to get you jumping up and down saying, oh, here's like this huge issue. Like, it's just not. It's fine. I completely poo-poo these headlines of, payroll growth less than expected. If you're within 9,000 of the number people are expecting, you're dead on the money. I'm sorry, but you are.
Agreed.
So let's. Anything else you want to touch on with regards to the jobs report? I think this is a pretty straightforward one, quite honestly.
Let's move on from the jobs report and get back to, I guess, tariff chaos.
Yeah, let's. Well, we got some tariff stuff to talk about. Yeah, let's talk about what happened yesterday when we return.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
In today's economic climate, managing your finances can be a full-time job. This is Mike Armstrong from the Armstrong Advisory Group, and our experienced team of advisors understands the challenges that exist and the questions you may have when it comes to your own financial strategy. Our new guide is called What Can a Financial Advisor Do for Me? In it, we'll help you find answers to some of those questions. At Armstrong Advisory, we can provide you with information that may help you with decisions about your investments. Our team can also advise you of the need to work with a professional in other areas, such as taxes, estate planning, or insurance. Understanding the role these elements play in a well-rounded financial plan is extremely important. Give the Armstrong Advisory Group a call at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Services. Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
So yesterday, we got a couple of different announcements. The first was yesterday morning when the Trump administration announced that they were pulling back tariffs on basically goods imported from Mexico that are compliant with the USMCA, the U.S.-Mexico-Canada agreement that was signed during President Trump's first term. Later in the afternoon, we got an announcement that the same was being done for Canada as well. And so ultimately, when you look at this, I'll quote here from the Wall Street Journal, a White House official said about half the imports from Mexico and 38% from Canada are exempt from the tariffs under the USMCA. And in any case, officials said that this would basically no longer apply. It's predominantly automobiles and agricultural goods. So if you look at this, obviously the auto industry was kind of like, hey, this is kind of a problem for us when it comes to, being able to assemble vehicles. The estimates that I've seen are that if these tariffs were implemented on the auto sector, it would add anywhere from about $10,000 to $15,000 per vehicle in cost for Americans buying cars. And likewise, we also had, the great avocado panic of Tuesday of this week, and so that you can now put to bed as well. Canada basically said that, hey, we are going to leave some tariffs that are in place, but the ones that they were going to levy later in the month, they are not going to now. But again, this was just a 1-month reprieve on this, and so, Mike, the thing that you're hearing, and this you're hearing it publicly now from business leaders, this is from the CEO of Brown-Forman, who's the parent company. If you haven't heard of them, they're the parent company of Jack Daniels and a bunch of other whiskeys. And this is him on CNBC yesterday. Look, I don't know any more about this than all of you. That's what's so difficult about it. Every day it seems like the story changes. And so I think this is the thing that you're hearing from CEOs, which is, look, if the idea behind tariffs is that you want to bring manufacturing back to the United States, you can't have them in place for a day because I can't build a factory in a day. And furthermore, once the tariffs are removed, then I've built the factory and now I have nothing to do with it because all of my competitors are going to just buy from overseas. So I think the thing that you are hearing now from CEOs is, look, we need more certainty on this, and if you want us to bring production back to the U.S., and you're going to use tariffs as, the means to do so, then you've got to commit to it, because otherwise I'm not going to do it if it's just going to be this on-again, off-again thing.
Yeah, and to be clear, I think most CEOs, maybe they're not saying it publicly, but they're also saying we don't want the tariffs, but if you're going to do them, then we're not going to respond to them after a half a day. Right, and
you can't build a factory in 12 hours.
Right, and it would be silly of you to do so at this point, because to your point, Chuck, if tomorrow my competitor can go back to importing car parts from Mexico at much cheaper than it would cost me to assemble them in Detroit, then I'm not going to be competitive anymore, and I've got a real problem. And so, again, I come back to, one, there is a lot of confusion. I mean, the estimates that we had seen previously were that with these new tariffs in place, the average effective import tariff rate on the goods that we consumed in 2023, if those were to continue in 2025, would have bumped up to like 10.7%, the highest rate of tariffs that we had seen since the 1940s. With this USMCA waiver, I have no idea where that is. I don't think anyone has any real idea in terms of what the average effective tariff rate would be. So there's a lot of confusion there. USMCA in and of itself is a complex type of trade deal here, where a lot of companies, because of the sourcing requirements and all of the details in there of cataloging and understanding where these products came from, many companies in the first place just said, I'll pay the tariff rather than come up with the compliance to make sure that I'm complying with USMCA. The amount of confusion, to your point, that is bubbling to the surface here, and I think probably starting to disrupt businesses, is getting substantial, and I think goes back to something that we have talked about at length, which is I don't understand what the actual goal of a lot of these things is. We've talked about bringing manufacturing back to the United States. We've talked about countering China's influence in places like Mexico. We've talked about making sure that illegal fentanyl doesn't come across the borders anymore. And if those are your three priorities, understanding which one is the real biggest priority helps you understand how long these things might be in place for. But to your point, to bring manufacturing back to the United States, it doesn't work to have it in place for 3 days or 3 months or, frankly, even 3 years. You need a firm commitment from an administration that this is going to be in place long term so I can compete.
And just to give you an example, the complexities of U.S. MCA, I'm again going to quote from the Wall Street Journal here. For example, a passenger vehicle only complies with USMCA if the majority of the components, including the steel and aluminum, originate in North America. In addition, 40 to 45% of the vehicle's value must come from factories where the workers earn at least $16 per hour. And so this is just something where, again, that's just like one little piece here of the deal. I have no idea. The first thing that I did yesterday when I saw this, I'm like, okay, what goods are USMCA compliant? And there's no easy list of anything, because it's not even all of one type of good. It might be, well, the cars produced at this factory are, but the ones at this are. It's really complex, and I'll be the first to admit I have no handle on exactly what it means. And I think this is part of the reason why, despite the multiple announcements, you had 2 of them yesterday, that you were, having some of these tariffs relieved, the market couldn't rally. I mean, again, you had a splat day pretty much where the S&P was down almost 2%, the NASDAQ down 2 3/4%. And so I think this is the landscape that we're trying to sort through now, which is, hey, can we get some certainty about what the implementation is going to be, and then from there we can move forward. Look, I've said since the beginning of this term here for President Trump, hey, if you want to move forward with tariffs and this stuff, let's see how it goes then. I have an open mind to being able to say, all right, let's make these big changes, because we know what's going on in America has not been working for a large group of people. And so I'm willing to say, okay, if this is what we want to try, let's go ahead and let's do it. But the back and forth, within the week here, and even within the last, few weeks, it just makes it challenging to see where, how this is going to play out strategically, and it's impacting markets, I think, at this point. Let's take a quick break here. When we come back, we've got Wall Street Watch right after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans in their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up. Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets were flat as a couple minutes ago, but now not so much. Wall Street continues to navigate through tariff developments, and investors also digesting the February jobs report unveiled this morning, where 151,000 jobs were added last month, slightly less than estimates of 160,000. At the moment, the Dow is now down by over 0.25% or 118 points. S&P 500 now down by over 0.5% or 30 points, and the Nasdaq down over 0.2% or 122 points. Russell 2000 dipping into negative territory by 0.2%. 10-year Treasury yield down by 4 basis points at 4.24%, and crude oil up 2.5% higher on the day, trading at right about $68 a barrel. Broadcom shares are up by nearly 3% after the chip maker reported a surge in AI revenue for the previous quarter and issued optimistic guidance for the current quarter. Other chip stocks, including Nvidia and ARM, are also seeing minor gains on the day in reaction to those earnings. Meanwhile, Gap reported an earnings and revenue beat for the holiday quarter. The retail giant, who also owns brands such as Old Navy and Banana Republic, also saw its same-store sales climb 3%, better than street forecasts of 1%. Gap is up by 14%. Elsewhere, Hewlett-Packard Enterprise down by 15% after the software company said it would cut about 5% of its global workforce. The company also warned tariffs would weigh on its annual profit. Walgreens struck a deal to be taken private by Sycamore Partners for about $10 billion. Walgreens up by 7%. Costco's quarterly revenue missed expectations, but growth in same-store sales was higher than expected. That stock, however, retreating by 6%. And more volatility could ensue later today, with Fed Chairman Jerome Powell slated to speak at 12:30 this afternoon from the U.S. Monetary Policy Forum in New York City. I'm Tucker Silva, and that's Wall Street Watch.
Mike, just want to touch on a couple of the items from that, if that's cool with you. One of the things that is really interesting to me, and not in a good way, is when companies report good earnings and then end up getting punished by them or can't hold on to gains in those earnings. Again, think about what we've seen the last couple of years from companies like NVIDIA. NVIDIA reports blowout earnings, better than expected. The stock rallies, and that kind of propelled things forward.
Yep.
A couple weeks ago, NVIDIA reports earnings. They were good earnings. Like they beat meaningfully on earnings, better than expected. Like the guidance was good. Look where they are now relative to when they reported earnings. They've just gotten beaten up.
They're getting punished.
Broadcom reported great earnings. The first thing that I heard from someone last night after Broadcom reported earnings was, well, maybe we shouldn't have lumped them in with Marvell Technologies, which got hammered yesterday. Hey, this is like way better. Like, look at these earnings. They're great. Stock was up 16% after hours yesterday. It's up 2 now. Costco. Again, like you go through the numbers, it's like, hey, the same store comps are good. Like the numbers look really good. Can't catch a bid. And part of this, there's 2 things at play here. The first is, okay, like just overall market sentiment and things like that. And the second, which we've talked about, we touched on this with Costco the other day. I can't remember if I was talking about it with you or Paul, but Costco right now is trading 53 times forward earnings. It's trading at twice the valuation on a relative basis to NVIDIA. Now look, I love big pallets of meat as much as anyone else.
Oh, yeah.
Okay? My life is made eating big pallets of meat. But 56 times forward earnings for big pallets of meat?
Pretty wild.
It's kind of wild. And so it's a combination of, overall market sentiment right now and still the frothiness that's out there in these markets. And so until one of those things turns for the better, you've got some risk that is present on this. And so I think that's kind of what we're seeing right now when we look at how these stocks that are reporting, again, good earnings, and they're getting beaten up. It's kind of happening across the board right now, and it won't happen forever. Like, this is the thing. It doesn't happen forever. Eventually you get to a point where it's like, okay, like we've washed that out of the system and we're good to go. But it's pretty clear that today, at least, it's not out of the system yet.
Well, and this whole week has been defined by very volatile swings, at least relative to what we've been used to over the course of the last few years. But yeah, to your point, like as we went into the last break, which was now 11 minutes ago,
the S&P sold off a full 1%.
Exactly flat. Now we are down substantially here, and this is also on what I think by most would be perceived as positive trade news for markets and investors, at least, of a suspension of tariffs again. We remember what happened to equities in February when these things got suspended and delayed, and I think this is a very different market reaction to that pretty much same news, right? Like this news that we are getting now is not all that much different from the way things played out in early February, where announcement of tariffs, waiver of tariffs, suspension for 30 days. We got almost the same exact thing here if you talk about the goods that actually affect average Americans and the goods that actually affect big publicly traded companies, and markets just aren't buying it for whatever reason. And I don't know that has much to do with the facts on the ground. Might have more to do with sentiment.
I want to move and talk a little bit more about tariffs. There's a piece from Bloomberg talking about Mexico and specifically some of the things that they are doing now. And one of the things that I find interesting in this is the difference in how things are being handled between the United States and Mexico and the United States and Canada. Mike, is it fair to say that things between the U.S. and Canada right now publicly are pretty darn ugly?
Yeah, we didn't cover it, but for instance, we talked about Canada dropping a bunch of those proposed tariffs, but province by province, Canada can also impose tariffs. And for instance, in Ontario, they have stuck with their proposed tariffs on energy that goes to New York, Michigan, and one other state, I believe. And they specifically cited, like, no, we are keeping this stuff in place in regards to energy prices, anything going to the United States, until all threat of tariffs are dropped. You had commentary from Scott Bessent yesterday about Trudeau that was pretty ugly. Yeah, I think things are, rocky right now in that relationship.
Really ugly there, like publicly ugly in terms of what you're seeing at this point. I contrast this with Mexico, where I don't exactly know what is going on in, like, none of us are in these negotiations, right? So, like, all of this is kind of best guess and best effort based on, what we can figure out. But both a month ago and in the last few days, the tenor of negotiations between Claudia Sheinbaum, who's the Mexican president, and President Trump seems to be, like, pretty darn constructive, I gotta say. I don't really know, again, what's going on behind closed doors, but for whatever reason, the two of them seem to kind of get along, at least from what we can gather publicly, to the point where in a press conference yesterday, Sheinbaum announced, hey, we're going to be reviewing the tariffs that we have in place with China to see if we need to be making any changes there. And this, to me, I do have to say, like, music to my ears, because as much as we can say that, like, the on-again, off-again stuff with Mexico and Canada is challenging from a business perspective, one place that I have, continued to kind of be in alignment is, there really is a problem with trade with China. And the stuff that we've done historically to try to deal with it has simply not worked because the Chinese government has not kept up its end of the bargain in many cases. And so if you want to try to bring them to the table or just try to, equalize things or make things more challenging, just for them to continue to abuse the free trade system the way they have, like implementing tariffs not just on your own, but getting a coalition of countries that buy stuff from China to do so, man, like, doesn't that feel like exactly like this?
Progress,
this feels
yeah.
like this. I'm looking at this. I'm like, oh, okay. Now we've got something here. Like, this is what I would like to see in order to try to remedy some of this stuff. And again, I don't know how Scheinbaum operates. I'll be the first to admit I know nothing about. I don't know where she falls on the political spectrum. I know nothing about her, which is probably my fault. It is my fault, but she seems.
Not your fault.
Not you. It seems to me that she gets Trump in a way that other world leaders might not, and somehow is able to make that relationship work in a way that our neighbors to the north, like that, it's just very different, and I don't know if there's a right or wrong approach. Like, I don't know how this all ends up playing out in the long run. I'm just saying, hey, whatever she's doing is getting her the results that she wants for her country, and also seems to be accomplishing some things that seem to be meaningful for the U.S. as well. And that to me seems positive.
Where I'm landing on some of this stuff is that the mere threat of tariffs may be able to get you some meaningful accomplishments, such as crackdown on the border, fentanyl, attitude towards China, and action towards China. It may not be able to get you manufacturing jobs back in the United States, right? Just the threat of tariffs,
sure.
Because Ford is not going to relocate a manufacturing facility based on the potential threat of tariffs. But if you can get some meaningful action on the other items, that is, in my view, a significant progress. The question that I can't answer is, does the Trump administration see it as significant progress, and will they build on that part of it rather than the pure renaissance of manufacturing in the United States? It's just tough to know what the real priority is.
Let's take a quick break. When we come back, Mike, you want to talk eggs?
Always.
Which came first, the chicken or the egg? We won't answer that question next segment, but we will be talking eggs.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. one. Call Cushing & Dolan today at 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699. Or you can request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
All right, Mike, so the price of eggs continues to be, well, it's high. I believe we're still at the highest egg prices that we have ever seen.
Yes.
And so, according to a report from Bloomberg, U.S. officials are searching across oceans to find enough eggs to ease a shortage that sent prices soaring, forcing grocery stores to limit customer purchases and restaurants to add surcharges. Poultry trade groups in countries like Poland and smaller players like France and Indonesia say they're fielding inquiries from American embassies in the U.S. Department of Agriculture about eggs for export.
So we've all become kind of egg experts over the last few months here. The part of the big challenge here is there is no real international market infrastructure for eggs.
No, there are no egg trains from Canada. There's no egg pipelines.
It kind of makes sense. They're a pretty delicate item to ship around the world, but eggs are a very local market. They typically don't cross oceans very often. They barely cross, I'm sure they cross borders in Europe, for example, but there is not a lot of global trade of eggs. And so importers are finding, like, yeah, there's some countries that might be willing to sell this to us, but they don't have the great infrastructure to how to ship it. And they're kind of making this stuff up seemingly on the fly.
Do you know the 3 states in the U.S. that produce the most eggs?
Iowa?
Yep, Iowa's number 1, 1 billion eggs a year.
Nebraska.
No, Nebraska is not in the top 10. It looks like it's...
Iowa's my only guess. So.
Where is
Indiana?
Nebraska's like 15.
Give me Indiana.
Indiana is number 2.
Ooh. Yeah.
And number 3?
Delaware.
No, Delaware eggs are not a thing. It's not a thing.
Texas.
The great state of Ohio.
Okay.
Yeah, Ohio and Indiana both produce about 900 million eggs a year.
Yeah.
And
not these days.
Probably not.
Yeah.
But so there is, interstate egg commerce, like where the New England region doesn't really produce eggs. It's just not our thing, aside from, backyard coops and stuff like that. But big egg production basically stops at Pennsylvania. Other big egg producers, Michigan, Georgia, Texas, Missouri, and Arkansas. So there you go. That is egg production in the U.S. But yeah, as we're trying to get eggs from overseas, we're finding you don't have specialized transportation for getting eggs on planes en masse, and this is kind of a problem because, hey, if you get a little bit of turbulence, Mike, what happens to eggs?
Scrambled.
Yep, you might as well just turn on the broiler and call it a day, right?
A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they can also be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today by calling 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Chuck, this market is, I don't know how closely you've been following it, but just in the last 5 minutes, we just went from down 0.7% to basically flat again to now once again down about 0.33% on the S&P 500. This is a market that has no idea what it's trying to accomplish right now.
Let's talk about this a little bit because this is a dangerous type of market for individuals. And the potential for an overreaction on your part because of emotion is significant. And this could go both ways, either in terms of hey, I'm going to buy the dip, or, oh, it's time for me to sell this, I can't deal with this anymore. There's been so much chop. I mean, last week into the early part of this week, remember, we had 3 straight days where it was down 90 points, up 90 points, down 90 points on the S&P. We got basically nowhere during that time, right? When you factor in all the chop that we saw. This week it's been, a continued slide, but still very choppy within days. I mean, when you're moving, 1% in a span of 20 minutes, there's just no certainty as to where this market wants to be. And so I think this is one where, hey, unless you actually have some kind of, trading strategy that you use, trying to time this market based on, again, the fact that we have, intraday news flows where the situation is evolving rapidly, you're just going to end up getting chewed up most of the time. And so this is not to say invest in stocks or don't invest in stocks, but much more, hey, unless you think that you can beat the guys that are paid to do this all day, every day, and have way more information than you, and the one trade that you make a year, come up with what your plan is for the long term, whatever that works out to be for you, and don't try to manage this day to day, because you're going to get absolutely chewed up and spit out trying to deal with this kind of whipsaw. It's just very, very volatile right now, and I don't know many people that can succeed in these kinds of markets. Quick break. We got hour 2 coming up.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans in their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline Qualification Line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699. Or you can request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated.
This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Kicking off hour 2 of the Financial Exchange. It's a Jobs Friday here, and at 8:30 a.m. this morning, we received the jobs report for the month of February. And what we saw was 151,000 jobs created, which, while technically under the 160,000 expected by the market, is well within the margin of error. And so, honestly, all the headlines saying that this was, fewer jobs than expected, it's just not even. It's not statistically accurate, quite honestly.
Yeah,
it's actually not statistically accurate given the average size of revisions to these. So I am saying that this report was right in line, in my opinion. So take that, headline writers. Unemployment rate did bump up to 4.1%, and average hourly earnings came in at a 0.3% month-over-month clip. Overall, headline numbers look, pretty good. You don't want to see the unemployment rate go up, but it was a minor shift. The underlying stuff, there's some concerning stuff in there that you got to watch for. The labor force participation rate dropped by 0.2%, so if that didn't happen, the unemployment rate would be 4.3%. Also, the U6, the underemployment rate, went from 7.5% up to 8%, so that's not something that you like to see. But overall, these are, kind of one-time things that we've seen here, and you don't want to extrapolate too far on them. So I think this report is fine with a note of caution. I give it a B- as a result. Mike, I think you said you give it a B, and we'll see what happens next month. But
I think it bears reminding too that a unemployment rate of 4.1%. Like we've been talking about this frozen labor market, and I do think that this is a labor market that would have a tough time absorbing a bunch of layoffs if they were to occur. You could see that unemployment rate shoot up pretty rapidly if companies started cutting, if the government followed through on its cuts. It's not a labor market that is going to immediately absorb those new entrants to the labor market if they get their job cut. 4.1% unemployment is fairly rare still. This is a very low unemployment market. It might be frozen. It might be challenging for new college graduates to enter the labor force right now. It may be challenging to find a new job in your area of expertise if you are laid off. It is not a bad labor market. It is, in fact, quite a strong labor market given what we know about it today.
Yeah, the question that you end up with labor markets is, hey, there are two components to how good a labor market is. The first is, okay, what are your baseline conditions? And the second is, what's the direction of travel? And so, as an example, if the unemployment rate over the next few months goes from 4 to 4.5%, yes, while still low historically, it also indicates that there are more people losing jobs than gaining jobs. And as such, that's not a good labor market anymore because the direction of travel is bad.
Yep.
That hasn't been the case that we've seen for the last 6 months now. The direction of travel's basically been flat. We've been floating between 3.9 and 4.1 for, I want to say, like 6 months now. I think going back to like August maybe. I haven't looked quite honestly, but it's somewhere in that ballpark. I'll pull it up right now actually just so I can speak more conclusively. Yeah, so if you look at the unemployment rate and where it has been, it's basically been between 3.9 and 4.1 since last April, actually. So 12 months. 4.2, 3.9 and 4.2. So we're right in the middle of that range. There's been no directional shift in the labor market over that time, as opposed to, hey, beginning of 24, you were at 3.8, and then you went up to 4.2. So you say, okay, like directionally it was moving in the wrong direction, and that's why we were watching the labor market closely, saying, hey, is there something happening here? This right now, it's one data point moving up, like the last couple have been coming down for the unemployment rate. So let's not overreact to what we see here. This jobs report is just fine, and we'll see what we get out of the next couple, and then we can actually have some data to play with instead of overreacting for a completely fine jobs report.
May I add one piece on the labor market just as a good reminder to folks out there? It is not a leading indicator. You do not have people getting laid off because companies are worried about a recession to come. It is quite the other way around. As an example here, we entered recession in December of 2007 during the Great Recession. Unemployment rate was at 5%. We did not hit peak unemployment until October of 2009 when we hit 10%, and we had already left that recession.
So there's that. Let's talk a little bit about Treasury Secretary Scott Bessent's comments from yesterday. I'll read the quote that he said at the Economic Club of New York. Access to cheap goods is not the essence of the American dream. The American dream is rooted in the concept that any citizen can achieve prosperity, upward mobility, and economic security. For too long, the designers of multilateral trade deals have lost sight of this. The first sentence is kind of what got all of the buzz in relation to the tariffs that were implemented earlier this week, and then some of them pulled back, but that access to cheap goods is not the essence of the American dream. I get what he is trying to say, but the combination of the timing and then the way he said it, I don't think is really... As you are, potentially seeing prices being increased because of recently implemented tariffs, I don't think that it's the best thing to be like, hey, you shouldn't want cheap stuff.
Well, yeah, it's basically telling people to suck it up.
Which is a fine... I get that.
Yeah.
But the counterpoint to it is, okay, if you want to tell people to suck it up, then why are you pulling the tariffs back later in the day?
Yeah, I think there's a lot of problems with the consistency between messaging and action, and I fully accept all that. But I think the stuff we've been hearing from Bessent, I think, does actually address what at least he thinks the Trump administration is attempting to accomplish here, which is we are going to inflict some uncomfortable periods of time on the American public. And buckle up for that, because we think that the other stuff that will come down the line can really benefit folks who have been, missed for the last 50 years in terms of economic development and progress in the United States. And that's a lot of people, right? A lot of people have missed out on the asset growth and the wealth effect in the United States over the course of the last few decades. And he's trying to speak to that. But I think where the rubber hits the road, he spoke about many other things. I think most of these were yesterday, but, hey, if we can raise tariffs, which raise prices for consumers, but then deliver to consumers things such as tax cuts on Social Security tips and overtime, then we are doing exactly what we're promising here, which is trying to impact upward mobility and make the rules of our economy work more in favor of Main Street. The problem is I don't think anyone is really buying that is necessarily going to happen right now.
Well, look, there's going to be two ways, and we're 6 weeks in, so you can't judge anything at this point because you're not through it. But there's going to be two things that you look at in order to judge this. The first is how deep is the pain, and the second is how long does it last before that better part comes. Like, what's the recovery look like afterwards? And the dangers on this are twofold. There's two things that can potentially go wrong, and we're not going to know until it's going to be like a couple of years. Like it's been 6 weeks. Like let's be patient on this a little bit. But ultimately, when an economy starts slowing down, it's kind of hard to recover it and rein it back in. This is why when we talk about the Fed, they often have this quote of, hey, there are long and variable lags in monetary policy, which is basically, when we start cutting interest rates, it doesn't turn the economy on a dime, and we're never quite sure exactly how it's going to play out, hence the variable piece. Like, the economy's a complex set of systems, and you don't just manage it by pushing a button, So I think one of the dangers is, do they lose control to the downside too far? I don't know. I'm not going to punish them for something that hasn't happened yet. It's just, hey, this is what could happen. The second one is, okay, after the downturn abates, again, because Bessent is coming out and saying, this is where I think we're going. After it abates, what does the recovery look like in terms of the speed and the distribution of it? The Great Financial Crisis recovery was really bad for two reasons. Number one, it was slow. It took 6 years to get back to unemployment under 6%. So that was a long time that a lot of people were without jobs. And the recovery was also very unevenly distributed. Income inequality widened during that time. Wealth inequality widened during that time. So the question is, on the back end, can you then have a rather rapid recovery where the recovery is more evenly distributed to the people that you're trying to help on this stuff? And we're not going to know that yet. We can't say it's good or bad because it hasn't happened yet. We just have to wait and see. That's what it's going to be. Am I wrong?
No, you're defining it correctly, and I think the important question is both how willing is the administration to truly inflict that pain, how severe is it going to be, how long is it going to last, and are Americans willing to take it, or do they vote 2 years from now to change the direction?
Well, look, here's Mike. You and I have talked about this quite a bit. We can't just do all the fun stuff. Eventually, you have to do the unfun stuff too.
Yeah.
And look, if the Trump administration is willing to say this is our attempt to do the unfun stuff, let's go. Let's see how it happens. We're still gonna have to see the results, but I buy the premise of, we've kind of done too much fun stuff economically. I don't know, the economy doesn't really seem like it's been fun lately, or for the last couple decades and stuff. It's been hey, here's your tech bubble, and there's your housing crisis, and here's COVID, and then here's inflation, and it's kind of been sucky in a lot of respects. But part of it is, hey, we've got rolling deficits that are now 7% annually. They're too high. You can't just keep paying more money out to people and not doing anything on the tax side. You got to manage these things, and I give the administration credit for saying, hey, we're going to try to do it and here's how we're going to do it. Whether it works or not, that's the open question. But no one's tried to tackle this for 20 years. And so if they make a serious, good faith effort to say, yeah, we're going to do this and give it a shot, okay, let's roll. Let's see what happens. That's kind of where I'm at. Let's take a quick break, and when we come back, we'll do some trivia right after this.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network. Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bend you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. And if you act now, you can take advantage of a special promotion to St. Croix. Experience a vibe like no other and get a $250 per person airline credit when you book a minimum 5-night stay at participating hotels. Go to visit usvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com and use code VIBE2025 to book your trip. That's visitusvi.com and code VIBE2025. Time for trivia here on the Financial Exchange. And on this day back in 1876, Alexander Graham Bell received a patent for the telephone in the U.S. The first telephone call was made on March 10th, 1876 by Alexander Graham Bell to his assistant, Thomas Watson. Trivia question today: what did Alexander Graham Bell believe should be the greeting on a telephone call? Once again, what did Alexander Graham Bell believe should be the greeting on a telephone call? Be the third person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the third correct response to text us at 617-362-1385 will get that t-shirt. See complete contest rules at financialexchangeshow.com.
Mike, we got a piece in the Bloomberg. Americans fall behind on car payments at the highest rate in decades. So what we've got here is that in January of this year, the share of subprime auto borrowers that are at least 60 days past due rose to 6.56%. That is the highest level that we have seen for auto delinquencies in that group since they began collecting data in 1994. Which doesn't seem great.
No, it is not great, and it follows some other similar data like credit card debt. These are
subprime borrowers, and the simple way to say it is people at the low end of the income spectrum are in a real pickle right now and are not able to navigate this economy very well at this point.
Yeah, wages haven't kept pace with inflation. If you are on that scale, and especially if you've had to borrow any money to buy something, like a house, like a car, with these interest rates where they are, it has been particularly difficult to keep pace with that. I guess other important question, though, Chuck. Auto loan market, probably not the thing that's going to send us into a subprime loan crisis-driven recession, right?
No, here's the thing. The auto market is tiny compared to the housing market. It's about a tenth of the size. And furthermore, when you look at the housing market, delinquencies, the transfer rate between loans that are minimally delinquent and seriously delinquent, there's nothing out there that is, flashing red in the housing market. The housing market is as healthy as you have. I mean, aside from 2021 when a lot of people didn't have to pay their mortgages and stuff, and this is basically the healthiest that the housing market has ever looked from a lending perspective. Now, from a price perspective, if you're saying, hey, are home prices potentially going to come down this year? There are markets where it's already happening. You look at lots of Florida, Texas, parts of Georgia now. You're seeing home prices that are coming down, but from a pure lending quality perspective, there is nothing out there. There's not even a yellow flag in the housing market. It is all green right now. So what's happening in autos and credit cards, remember, if you are a subprime auto borrower and if you are a low quality credit card borrower, you're not buying a house to begin with. These are people that have credit ratings below 640. They're not buying houses today because the underwriting is that good. So I think that in looking at this, the message that I would take is, there are real problems for lots of Americans right now. The ones that are experiencing them, because we have such a skewed distribution of income and wealth in the country, they own such a little percentage of the wealth and earn so little income that it's just not big enough to affect the U.S. economy, in my opinion.
It does also speak to, though, I think something that this administration is at least voicing properly, which is we can be a lot more effective if we can control the long end of the curve. What I mean by that is I'm not going to necessarily pressure the Fed to lower interest rates because it might not actually do anything for the average person other than drive stock prices up.
Sure.
So we are going to be working on the 10-year Treasury. Scott Bessent talks about this a lot. We want to see that come down. We think we can do it through cuts to government expenses. That's not been what they've gotten recently, which has been a fall in yields because of worries about recession. But that is where they are saying their focus is because they want to be able to bring down things like rates on car loans, not home equity lines, but car loans, mortgage rates, etc.
That is, I think entirely accurate in terms of what they're talking about here. So we'll see what exactly comes out of this. But in my opinion, auto delinquencies and defaults are just not a big enough market to cause a significant deleveraging issue in the U.S. that typically results in recession. It's too small of a market, and specifically this subprime market is again, even a fraction of what is already a relatively small market relative to housing. There are other parts of the economy that you look at and you're like, okay, there's some dodgy stuff going on there, but this is just not something that I think is big enough to cause an issue. It could be exacerbated if the economy slows further, but that's a different issue. Quick break here. When we come back, we got the trivia answer after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News & World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
All right, trivia question today was, what did Alexander Graham Bell believe should be the greeting on a telephone call? It would be either ahoy or ahoy hoy. Who the hell was our winner? Oh, Don for Whitman, Mass. was our winner today, taking home a Financial Exchange t-shirt. Congrats to Don. And we played trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mike, let's talk about this piece from Barron's. It says Social Security is in turmoil. Should you lock in benefits now? What's it talking about? What turmoil are we talking about?
We are mixing issues here. So Social Security Administration is under threat of losing 7,000 employees of their current 57,000 that work there. I'm sure if you work at Social Security, it feels like you're a bit in turmoil because you don't know if you're going to have a job next week. The commitment that Social Security seems to be making and that lawmakers seem to be making to beneficiaries of Social Security does not at all seem in turmoil. In fact, it seems to be like one of the only issues that both Republican elected officials and Democrats seem to agree on right now, which is we are not going to cut benefits for beneficiaries of Social Security. And so I think there's nervousness whenever you talk about turmoil at an administration that has the approval ratings that Social Security does, right? I think it's only the second most popular administration in the government, second to Medicare, or most popular government program, second to Medicare. But I don't think folks should be confusing the turmoil that the employees might be facing there and the delays that you could face on the phone when dealing with Social Security, for example, with the nation's commitment to the program itself. Are you reading anything differently here, Chuck, than I am about how America's elected officials right now are treating Social Security?
No, I'm not. I think that it's the big thing on the potential staffing cuts is that you could see, again, longer delays, less. You could actually end up with less efficient or less effective transmission of benefits and things like that, just because it takes longer to actually do what you want to with the system. But that's fundamentally different from, hey, the program's not going to pay what you thought it was going to pay, and that's just not something that is reasonable at this point.
Yeah, I can't imagine I can imagine being in the shoes of trying to make this decision, but can you imagine a worse decision than saying, hey, I'm worried about the customer service at Social Security, so I'm making a financial decision that's going to affect me for the rest of my life based on my concerns about customer service. Like that is not something that you want to see happening. But in the best of times, there's concern and uncertainty about how Social Security might play out for the average person. And my personal view is that for folks that are already eligible, I really don't think there's going to be changes to how those benefits work long term. But those potential changes to customer service and delays in getting things processed could be real for people. If you are staring down this Social Security decision, particularly if you're going to be eligible for benefits anytime in the next decade, that's where I think the rubber hits the road, because within the next decade, what we know is that the trust fund is due to run out of money. This is where the decisions are going to be made. And I think that too often there are decisions around Social Security made based on fear rather than actually understanding the real situation. If you have questions about your own Social Security benefits, how they could change in the future, and most importantly, what that would mean for your personal financial plan, give the folks at Armstrong Advisory Group a call. The phone number is 800-393-4001. We work with clients on a daily basis to evaluate how Social Security is going to play into that bigger financial strategy. And once again, the number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, we got a couple stories that I have to get to just because we got Paul and Monica coming on in a little bit with us. First, have you ever visited the Humber Estuary?
I have not. Chuck, is it a common lane where they ship eggs by any chance?
Because
that would be devastating.
Don't know. Tucker, have you ever been to the Humber Estuary?
No.
I haven't either. It is it's a large tidal estuary on the east coast of northern England. It's actually located between East Riding of Yorkshire and Lincolnshire.
Yes.
Which I've spent many a summer there riding frogs. Because that's what you do there. I don't know. Like, it's whatever. So, we got another boat stuck, Mike.
Oh, exciting news.
The H&S Wisdom. Oh, Jimmy, you got to keep it out of the mud. I know you got through the canal. Keep it out of the mud. So, basically what happened
We should have some real expertise on this by now. Can you ship some people over there that really know what they're doing?
I can't ship anything. The boat's stuck. So the H&S Wisdom is stuck. It was trying to go to Gunnis Wharf Port near Scunthorpe on Sunday. And basically what happened was low tide. I wish I were kidding, but I'm not. They've tried to refloat the vessel 3 different times. But now because, remember, tides are a function of the moon, the earth, and the sun. And basically because of the relative positions of those, the BBC has now been told that the tidal conditions will not be suitable for a further attempt until the beginning of April. So the crew has to stay on the boat for an extra 3.5 weeks while they wait for it to float.
Perfect.
It's just sitting there right now, and you look at this, and this is it's a big boat. I mean, it's not some tiny little thing that's just stuck there. In pulling it up, I'm trying to get a sense of how big this thing actually is, just so that I can. Here we go. What does marinetraffic.com tell me about this thing? Okay, here we go. No, I still don't know exactly how big it is, but it's a big ship. It's just like it's a big ship that is stuck there, and it's going to be stuck there for the next 3.5 weeks now at least.
Perfect.
So there's that. If that wasn't enough. These stories, Tucker, I got to give you some credit. You nailed the stack today. Absolutely nailed it. This from Gizmodo. Scientists develop a device that lets you taste video games. Is it called drugs?
So you can taste the mushrooms in Mario now, finally?
Like, what are we doing here? So it's It's basically a thing that sits on your lower teeth.
Who asked for this?
And injects flavors into your mouth in response to stimuli delivered by the video game.
That's right.
So you're playing.
Go on.
So you're playing Call of Duty, and your character dies, and you taste blood in your mouth.
Yeah.
Or you're playing Grand Theft Auto, and you pick up a slice of pizza, and you got pepperoni right in there.
So the things in that game you could taste. Yep.
So I'm just not really sure what the demand is for this, and furthermore, I guess
it seems like something that Zuckerberg's going to try and buy very quickly.
Well, doesn't it seem like this isn't hard to make, actually? Like, you basically program, like, okay, if pepperoni, shoot pepperoni in. Like,
well, I mean, yes and no. I don't have any knowledge of the device that would need and how many different flavors you could possibly create with such a... How big is this thing?
So
is it the size of a room?
Well, no, it's kind of like these little boxes that sit outside your mouth, so you got to, like... You kind of look like a walrus when you put it on. And basically they've got different flavors. So they got salt for salty flavors, citric acid for sour, glucose for sweet, magnesium chloride for bitterness, and glutamate for umami.
Perfect.
And so they can combine these to make different flavors, I guess. So it's like...
I doubt it.
Okay, so 2 parts of salt and 1 part of umami for pepperoni, is what you get or something. Who knows how they're going to actually do it. But it apparently is something that someone's trying to develop to attempt to make money.
It's right there alongside mung bean eggs in terms of things that were developed that nobody asked for.
They can reproduce that flavor too. So we'll have to follow up on this and see how it goes. But just fantastic stuff in the
I
news.
would prefer the KFC cologne that they came out with a few years ago over this product.
I wear
here.
that.
If I had my choice, that's where my money's going.
Absolutely, 100%. Let's take a quick break. When we come back, we are going to be joined by the one and only Paul and Monica from Barron's right after this.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network. A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699, or you can request the guide online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
The Financial Exchange is proud of our partnership with the Disabled American Veterans Department of Massachusetts. This year's 5K will be here before you know it, so mark your calendars for Saturday, November 8th. We'll be keeping you updated on registration information in the coming weeks, but in the meantime, if you want to make a donation, visit dav5k.boston, where you can make a donation today and support programs such as the Veterans Transportation Program, which takes injured vets to their medical appointments. That's dav5k.boston.
Joining us now, as promised, is Paul Monica from Barron's, here to talk a little bit about the stocks of various different government contractors. Paul, how are you today?
I'm good, thanks. How are you guys doing?
Doing great. When we look at the first 6 weeks of the Trump administration, one of the things that is notable in terms of changes from prior administrations is the Department of Government Efficiency trying to find ways to reduce cost for the federal government. And the question, because, look, employment is only one part. It's a relatively small cost of the overall federal government expenses. When we look at the payments that go out to government contractors, that is a huge sum of money. And so the obvious question is, hey, is there any chance that government contractors see those contracts impacted, and should investors be concerned about how their stocks perform?
Yeah, I think it's a great question. I think investors do need to be worried about the classic defense contractors and companies maybe like Booz Allen Hamilton, other big revenue from government contractors. But some stocks have been caught up in worries that they're probably overdone. So BofA Securities, Bank of America, they did a list earlier this week, noting that some companies that are among the top 25 federal contractors still only get less than 15% of revenue from government deals. So that's companies like Dell, GE Aerospace, Textron. But one in particular that looks interesting is Accenture, which really only has about 8% or so of revenue from government contracts. And, stock's down now, nearly 15% from a 52-week high from just a month ago. So there might be, a particular opportunity with that company.
In terms of when we're actually going to know about these impacts, how long do you think it is before we start to get some clarity on how they may be impacted?
Yeah, it's a great question. I mean, when you looked at the jobs report that came out this morning, there weren't as many job cuts at a federal level for February as many had thought may have been the case because of what's going on with DOGE. But a lot of economists point out that this is happening very quickly. You might see more job losses in the months ahead. So keep an eye on the March jobs report that comes out in early April. But with regards to a company like Accenture, I think they're all in the stage right now where apparently DOGE and the administration are asking for companies to explain exactly what it is they do. And there are a company like Accenture. They've had big contracts with the Department of Energy, the IRS, other federal agencies that may get hit, but you can't imagine that they're going to get totally gutted because it's important for the federal government to collect taxes and have a policy about oil and other sources of energy. So I think maybe the pendulum swung a little bit too far. If you look at a company like Accenture, a lot of analysts have price targets that are significantly higher than where that stock is now, and it's not that expensive a stock either.
Well, you mentioned it not being that expensive of a stock. Isn't that one of the things that I think makes it different from a lot of other stocks that are being kind of punished right now? Is a lot of them tend to be the pricier ones. This seems to be kind of a more unique situation there.
Yeah, I think that is the case. I mean, Accenture's by no means a dirt cheap stock, but the PE is in the mid 20s, so a little bit higher now than where the overall market is, given the pullback that we've seen in recent weeks. But the earnings growth is expected to be pretty strong. Accenture obviously has a lot of consulting businesses with corporate America, so they are again by no means as sensitive and tied to the government as, say, a company like Lockheed Martin or the other big defense contractors out there, or even a company like Boeing that has a significant aerospace business and a lot of troubles of its own in that unit. Generates a lot more revenue than Accenture from government contracts.
All right, very good. Paul, appreciate the time today. Thank you so much for joining us, and I hope you have a fantastic weekend.
Great. Same to you guys. Look forward to talking again next Friday.
All right, that is Paul LaMonica from Barron's talking about Accenture as well as some other government contractors. Mike, you know what happens this weekend?
Spring forward.
You got it. Kind of snuck up on me. I thought it was next weekend for some reason, but it's actually going to be this Sunday.
Sunday.
Where we go to the correct time.
Yes.
Looking forward to that.
What should be the always time?
Yes, the always time.
Let's reignite this debate.
We never have this
debate all this time here on the Financial Exchange.
No one ever talks about it.
Hey, you know what would just be better? How about a globe that doesn't spin so it's always light?
Ah, there we go.
What if we just attach some rockets to the Earth to stop it from spinning?
Wouldn't that spin faster?
Well, not if you push against the spin.
Don't ask questions.
Like you got to spin it the other way, Tucker. You got to push back.
We could go faster. That'd be nice.
You want to go faster?
Yeah, I want to go fast.
Yeah. If you thought you didn't have enough time in the day now, wait until we get to 23-hour days.
Boom, night.
It's day, it's night, it's day, it's night.
Long week.
Oh boy. Well, markets look terrible.
Yeah, the market continues to be not very. The interesting thing, Mike, and I know that it sounds weird to say this, it's been really orderly in terms of this sell-off.
Yeah, we have not had any circuit breakers.
No, part of you is kind of like, can you just puke and get it over with so we can be done with it?
Yeah.
Because here's the thing: when you have this kind of action, this unfortunately reminds me of 2022, where the market never really puked; it just kind of sold off and then rallied a little bit and then kept selling. This is kind of bear markety the way it's moving. It's not just okay, get it done with, have your 10% correction and move on. It's slow. Let's take a quick break here for the entire weekend. We'll see you on Monday.